right, welcome back to this week's edition of the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. Today we're going to be revisiting Tesla Incorporated. If you want to watch the original video back in June on Tesla, you can click the link above. Now, Tesla is a globally recognized leader in the design, development, and manufacturing of electric vehicles and energy products. The company operates primarily in two segments, its automotive segment as well as its energy generation and storage segment. Now, the automotive segment, which you may be familiar with, includes a wide range of electric vehicles, including the popular Model 3 and Model Y, as well as higher-end variants like the Model S and Cybertruck. Now, this segment also encompasses commercial electric vehicles with the upcoming Tesla semi-truck. Now, these vehicles are well known for their performance, integrated advanced technologies like full self-driving software capabilities. The energy generation and storage segment offers products like Powerwall and Megapack, which are widely used for residential, commercial, and utility scale energy storage solutions. This segment also includes the installation and sale of solar energy systems for residential, commercial, as well as those utility-grade projects. Now, taking into consideration the competitive landscape for Tesla, the company faces competition from several established and emerging players, both in the automotive and technology services industry space. In the automotive space, you can think of key competitors like General Motors and Ford, which also, as U.S. automakers, are making themselves more present in the electric vehicle markets. Now, BYD Incorporated is a major Chinese automaker that has overtaken Tesla in global EV volume, which highlights its competitive edge in the electric vehicle sector. Now, when it comes to other manufacturers, specifically in the U.S. in EVs, we have to think about Rivian and Lucid, both in the luxury EV auto space as well as light trucks and SUVs. And lastly, when we think about technology competitors, we have to think about Alphabet, symbol Google, and their Waymo division, which is an autonomous vehicle technology company. Now, Tesla's unique value proposition still lies in its integrated approach to both automotive and energy solution. It is one of the largest electric vehicle sellers in the world today, and it holds a significant portion of the EV market in the United States, with about 41% of the market share as of the end of Q3 2025. Now, the secular story for Tesla remains as how Tesla continues to innovate in AI and robotics, with projects like the Robotaxi network and the humanoid robot called Optimus, which is poised to leverage its extensive experience in artificial intelligence and real-world applications. Now let's take a look at some of the most recent news on Tesla. First off, in mid-December 2025, the company began testing its Model Y robotaxis on Austin streets with no one in the car. That includes no driver or safety monitor. As the no-occupant robotaxi full self-driving technology testing begins, it is also expected to expand in other major cities. Now, going back to October 22nd, the company reported its Q3 earnings as well as sales. Now, on a non-GAAP basis, the company missed EPS by about 6 cents, but they did post about 50 cents on an adjusted basis. Revenue actually beat the estimates and grew sequentially 11.6% year over year, beating the estimates by about $1.4 billion. CapEx was also lower sequentially quarter over quarter to about $2.25 billion versus around $2.4 billion in the second quarter of 2025. This is important because many of the large CapEx spending companies have actually underperformed the market as of late. More importantly for Tesla, free cash flow for the quarter actually grew to close to $4 billion versus around $150 million for the previous quarter. Lastly, the company also topped delivery expectations with over 497,000 units moved in Q3, but again, this is mostly due to a surge in buying activity before the expiration of the consumer EV tax credits. Now, when it comes to Tesla, there are many positives we have to consider. First off, the company's Robotaxi initiative, although in the early stages, is seen as a significant growth driver with potential to revolutionize urban transportation, offering a new revenue stream. Tesla's Cybercab and Optimus segments are projected to drive significant revenue growth, with Cybercab potentially reaching $54 billion in revenue by 2030, supported by strong free cash flow and innovation-driven potential. This is important because the Cybercab division, which is still in research and development, hasn't generated any revenue as of yet. The energy storage segment is experiencing rapid growth and margin expansion as well. This positions the company strategically to capitalize on the growing demand for energy solutions driven by the artificial intelligence data center needs. Tesla's AI chip roadmap, with the potential to drive major cost savings in robotaxi operations, could add an additional $11 billion in incremental annual profits by 2028. And lastly, in fiscal year 2026, the company is expected to generate over $100 billion in annual sales, which would be a new yearly sales milestone. Now, despite many of these positives for Tesla, we also have to address some of the lingering concerns. First off, Tesla's autonomous driving technology, particularly the full self-driving feature, faces significant regulatory and technical hurdles, with recent tests showing the system is not necessarily ready for mass market deployment. Ambitious projects like Robotaxi and humanoid robotics are capital intensive and face skepticism regarding their near-term profitability and feasibility, potentially straining the company's financial resources in the near term. Now, valuation is always presented as a concern by many analysts. If you take a look at the valuation on a multiple basis, considering the forward earnings multiple over 283 times, this is certainly much higher than the sector median of 18, but also much higher than the 5-year average of the company's 150 times earnings multiple. This is indicative of an expensive stock compared to its peers and historical average. Now, with the stock trading with the high expectations on full autonomy, this suggests that high multiple leaves less room for disappointment if timelines slip or regulation tightens. Now, from a growth perspective, next year, Tesla is only expected to grow around 4% in sales year over year. This is significantly below its 5-year average of nearly 30%. Now, there are many things to consider why this is the case, but possibly this is based on decelerating year-over-year total vehicle sales and lower product pricing due to rising competition from other foreign and domestic EV manufacturers. All right, now let's take a look at the technical analysis picture for Tesla. Despite hitting a new 52-week high and all-time high of approximately $495, Tesla has actually been underperforming the broad market over the last 52 weeks, only higher by approximately 2%. However, year-to-date the stock is higher by nearly 21%. Now, near-term price momentum is quite strong, with the stock up over 50% in the past 6 months and 23% over the past 30 days alone. The daily momentum is rising, as illustrated by a positive and rising MACD, and RSI above 50, yet the RSI still remains below 70, which suggests near-term price momentum may continue as recent price movement does not appear extended. And lastly, from a moving average standpoint, the stock price is above the 50-day moving average, suggesting intermediate trend is still positive and intact, while the alignment of price above the 20-day moving average suggests a near-term price action remains bullish. Now, in summary, we know that Tesla is a globally recognized brand with the potential to enhance global productivity with advancements in scalable autonomous driving, artificial intelligence, robotics, and battery technologies. Now, Tesla remains a premier physical AI and growth story, while electric vehicles and energy are in the present. We have to consider Robotaxi and Optimus robots, which are embedded in the long-duration secular growth story for Tesla. The recent Austin driverless testing headline strengthens a bull narrative, and Tesla continues to lay the groundwork for multi-city expansion. Lastly, the company's commitment to integrating artificial intelligence with its automotive and energy products may further enhance its competitive edge for years to come. All right, that's it for this week's edition of the Tech Corner. Don't forget to like and subscribe to the Schwab Network. Please join me again next week. We'll be talking about e-commerce and technology giant Amazon Incorporated. Thanks again for joining us. I'm George Tsilis. We'll see you next week.